Good morning, ladies and gentlemen, and welcome to Market Forecast brought to you by Options University. It's Monday, September 1st, 2014. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment security or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. With that thought, let's take a look and see what happened in that last week of August. As we looked at that last week of August, which was rather quick, let's first look at the Dow, Nasdaq, S&P 500, and the Russell 2000. Okay, looking at those respectively, we see positive numbers out of all of them this past week, and we see that the indices closed out the month on really a modest higher note, up 0.6% on the Dow, Nasdaq up 0.9%, S&P 500 0.8%, and Russell 2000 leading the pack up 1.2%. And look at this, year to date, everything now in positive numbers. Dow up 3.1%, Nasdaq up 9.7%, S&P up 8.4%, and Russell 2000 up 0.9%. Moving forward. So we had a rather quiet 4 days of the week, and then on the fifth day we did have some volume in the overall market. We had a number of announcements last week, all of them which were favorable for the overall economy. And one of the things that kept the market under control last week was the idea that they had a 3 day weekend and always that potential for geopolitical problems. So Monday was Labor Day and the market was closed. And so we looked at Tuesday. On this coming Tuesday, we have PMI manufacturing at 9:45, ISM manufacturing index at 10, and construction spending at 10 o'clock on Tuesday. On Wednesday, we got the ADP employment report. Give us some monthly figures on what took place. And we got factory orders at 10 o'clock. Looking at Thursday, international trade before the market opens. Every Thursday, we have our weekly jobless claims, productivity and cost before the market opens, PMI services at 9:45, and ISM non-manufacturing index coming out on Thursday. So Thursday is another day that's loaded. And then finally, we'll look at last month's, the month of August's employment numbers on Friday before the market opens. So a bit of news coming this week, giving us some kind of indication as what has happened in the economy during the last month of August. Now, taking a look at the S&P, we see that we are definitely in an uptrend, and look at what happened here, closing above 2,000, highest that the S&P has ever been, and we finally nudged up, which we had talked about it approaching there. But if we look at the last 4 days, in fact, let's go ahead. By the way, the uptrend continues. Let's go ahead and look at a little tighter chart, monthly chart, and we see that for the last 5 days, first 4 days, the market really did little or nothing, kind of traded in a tight zone, and it did so on very low volume, some of the lowest volume of the year. And then Friday we got back up to kind of normal volume and a nice close into the weekend, where we're closing very near the overall highs. Is the market going higher? Is it going to stall out here? Well, that remains to be seen. But if we see this thing break up, we're going to expect another move. We had quite a move from the bottom to where we currently are of about almost 100 points. So, again, we get to that point where it's time for the market to cycle and maybe pull back. But, these things can cycle up as long as they want, as we see the Fed still being favorable to the overall market. Looking at the Dow, it looks exactly the same. Had a rather quiet week, but we did get up to those previous highs. We didn't have a breakout and didn't move above that, but certainly had a nice move off that 200-day moving average, where the Dow just continued on up to its previous highs above 17,000. Not much volume out of the Dow, a little more on Friday. So the Dow showing us good strength, where air might be getting a little thin up here, maybe time for a little bit of a pullback. Time will tell. We'll see what happens this week as we move forward. Looking at the Nasdaq, we see exactly the same thing. 30 above the 50, above the 200-day moving average, and we see the market just continuing on up and stalling out a bit here as we get to this point. and we could trade here trying to figure out whether we're going to get more momentum to the upside or not. But certainly is more room to the upside as this market just keeps churning along of the happy Obama days in the market. We should say happy Fed days in the market, just keeps pushing along. Russell finally climbed into positive numbers for the year, and we see that it started well below the 200-day moving average, and on this current run has gotten back up to about half of the way of our spread for the last 3 months. So we'll see whether this continues on up. There is room to the upside for the Russell to continue on up. And so with that, let's take a look at the VIX. What would you expect of that? Look at who we're back in these low numbers again. Not as low as we had been when we were moving in the month of July, but the time of uncertainty in the market seems to have gone away, and we're down here was the market doesn't have a great deal of fear. And remember, that affects your option trading and how much volatility there is in those options as they're priced. Looking at our ETFs to determine what some of the other sectors in the market are doing. Taking a look at the bond market, we see we're up into highs for the last 3 months. So it seems like this could just keep going a little bit higher as some of the money certainly seems to be moving into bonds this summer. Then when we look at gold, the gold's showing us no party whatsoever. It's going to really take some kind of fear to get this gold market fired up and move it back up to some of its previous highs. And finally, we'll look at the financials. Financials pretty much do what the Dow and the S&P do, and that's exactly what we saw. A little bit of a pullback on Thursday, trying to call up the high, but here we are at highs for the last 3 months. So showing good strength in the financials as they move up forward into some new highs for the moment. Oil, well, we see oil had a nice little cup here. We'll see whether it continues on up, heads up to that resistance area at that 200-day moving average. And then don't be a bit surprised if we see it pull back again. That'll be our next resistance point. So watch carefully as it hits there and then look to see which way your pivot goes, which way the momentum goes on that, giving you the potential for an oil trade with this ETF. Long or short, depending on what it does around this 200-day moving average. There you go. The chart will tell you what to do. So with that, this is Butch Shorek bringing you Market Forecast, brought to you by Options University. It's Monday, September 1st, 2014. We're in the fall, and so the summer officially is over. The kids are back to school, and we'll see if some of the big boys come off Long Island and put a little bit of momentum into this market. Remember, most of what's taken place this summer has been done on rather low volume, so we'll see whether we get some guts back up into this market. So with that thought, thanks for being here, and we'll see you next month.